Good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Wednesdays, February 16th. God, I forgot what day it was. It's the middle of the week. It's hump day. Morning, Ollie. How are you?
Yeah, very good. Thanks. How are you doing?
Yeah, no, not bad. Although the weather is turning a little bit nasty, a little bit drizzly this morning on the bike ride in. Right. Did you get drizzle this morning or not?
A little bit, but not too bad. I feel I've got away with it so far.
Yeah, we are, of course, the office bikers. Anyway, let's turn to mining. Actually, why don't we kick off? Lithium carbonate prices in China are going ballistic again. They're sort of up at about $64,000 per ton. I mean, Ollie, this is well, certainly it's about 10 times higher than it was 10 years ago when it was below $6,000 a ton. But I mean, it's also way off everybody's sort of forecast when you start looking at all these lithium mines. Well, I suspect you're using something nearer, I don't know, $15,000 or $20,000 a ton. I mean, can this last? And what the hell's going on?
Yeah, I think that's the sort of, those are the difficult questions. And I think there's a second part of it, which is sort of why analysts are still using lower prices for the long term. Near term, there's a lot of momentum, and I can't see that certainly in the next 6 months prices are going to start to fall, because at the moment all of the new supply isn't due to come online until second half of this year at the earliest. Expansions at Orocobre, start at Lithium Americas, expansion at Pilbara, and the start at Sigma Lithium. Those are sort of projects that are starting to come online, but obviously they're in relatively remote locations, and getting plants commissioned and equipment delivered in this kind of supply chain environment to heart of South America is going to be pretty difficult. So for those companies to meet their deadlines is a challenge. So I think you'll start to see some construction deadlines slip, and that'll obviously impact ramp ups and supply demand forecasts, which will mean that for the time being, lithium prices will probably continue to stay high.
Yeah, look, I mean, one of the issues that I see is that far too much lithium has gone into long duration energy storage, which it shouldn't really be. It should be used for EVs only. And long duration energy storage can use all sorts of other products. We obviously like vanadium flow batteries. It's far more appropriate. And I think the industry needs to see a big switch in that direction. But I mean, also one final thing before we go on to the news, Ollie, whilst we're talking about lithium. I mean, clearly, the industry has been starved of investment for 10 years, but, lithium is not as simple as oil, where you just chuck it all in a refinery and come out with one product, is it? Basically a battery giga plant needs pretty much one source of lithium, doesn't it? Because it's got impurities and things. You need to have a big resource with a lot of lifetime for it really to be viable. That's right, isn't it?
Yeah, the chemistry is key, and what often happens is that a company will produce a product with a certain level of impurities. It might be technically battery grade, but it won't be quite as high as the final end user needs, and they will actually just go and reprocess it to get it up to spec. So the less reprocessing and sort of homogenizing that you can do, the better. And that obviously has an impact on the revenues that lithium companies receive.
Okay, so a smaller lithium mine will require additional processing to actually be used.
Yeah. But going back to where we started, why analysts are using, sort of 15,000 or around that mark as a long-term price. That the way that you do commodity price forecasting is you take the cost curve and you apply a sort of 15% increase to the marginal cost at that time. Now, obviously, if you use the current cost curve, every single project is going to look fantastic. regardless of its position on the cost curve at the moment, because that only goes up to about sort of $11,000-12,000 a ton for carbonate. So one or two things has got to change over the next 10-15 years. Either that cost curve is going to inflate, or prices are going to come down. It'll probably be somewhere between the two. I think that the key things that you're going to have to look out for costs are the cost of reagents. The growth of the lithium market is going to put a huge amount of pressure on things like sulfuric acid and energy as well, which these projects are quite sensitive to. So is all the projects that are projecting $4,500 a ton going to be there in 10 years time? Probably not.
Look, obviously it's a huge discussion. Look, if anybody's got further questions they want on the lithium market, then feel free to contact us directly. We better move on though, Ollie, particularly as actually you put a research out today on Sierra Madre. So you better explain or give us the highlights of that, please.
So Sierra Madre is a gold and silver company in Mexico. We actually launched coverage this week, just after the start of their phase 2 drilling program at their initial project, Tepic. These are some assays from their second project, La Tigra, which they acquired last year, also in the Nayarit state of Mexico, and they're following the exploration plan, which has proven successful for the management team before. So these assays from some surface trenching along the structural corridor that they've identified. So 11 meters at a gram per ton gold from 3.8 meters depth, and 12 meters at 2.85 grams per ton gold from 4.5 meters. So for surface results taken from trenches, these are pretty strong. And I think the key thing here is that they're expanding the mineralized footprint along the 3-kilometer structural corridor that they've identified, which includes a past producing mine, which they've now started to gain access to. And the combination of this surface exploration work with access to the underground, you can start to link up veins that you can see at the surface from underground, and that's all being put together into a model. So a lot of exploration work happening, a lot of news flow to come over the next few months. So this is a company we're a fan of.
Yeah, look, and if anybody wants the research note or more information on this company, then again, please do contact us directly. Very quickly, I don't think there's much news out there, but anything you want to mention, Ollie?
Just some interim results from Pan African. I'll cover them as quickly as I can, but they look very strong. Gold output up 10% year on year to 109,000 ounces. So they've increased their guidance to 200,000 ounces for the year. That does imply a slightly weaker H2, but overall positive. AISC down 6% to $1,173 an ounce. That's in line with their target of $1,200. Given that operating cash flow in the period's up 54% to $43 million. They're deleveraging, debt down to 24 million, and a record rand dividend, but obviously with the currency conversion, I don't think it's record in dollar terms, but all very positive.
Okay, great. Well, actually, an interesting discussion today anyway. So, but let's call it a day there. Thanks, Ollie.
Speak soon. Cheers.